Happy weekend from VolumeProfileTrader.com. This is Nick Inman on Saturday, March 24th, and this is going to be a broad overview of the market, looking at the positions we're in and looking at a few trading ideas that you can take and maybe apply to your portfolio. So overall, the S&P continues to work. We had a 3-day pullback this week, and the market finished on Friday. Let me zoom in so you can see. Finished on Friday strong and at the top end of the range. We had a nice hammer pattern, and looks like, as far as risk is concerned, you can look at Friday's intraday low and kind of place your stop right there. And if price goes under that, we probably have a little more downside. And as long as price stays above it, then you expect a retest of 1400 plus. So be prudent, but realize that the market, there's really, if you really look at it, there's nothing wrong with it right here, right now. NASDAQ, same thing. I'm actually going to go back to the S&P, bring up the hourly charts, show you what's going on. So if we do fail at these levels, and generally speaking, let's say this 1380, 1384 is support, and what we're looking for is, can price get back above 1394, which is basically where it closed, and if so, can it recapture this high volume area from 1394 to 1400 and eventually trade above that? If we can trade above that, we'll go and test the highs, and we'll probably continue higher. If we don't, it's very important that you watch out for some type of lower high. And as far as a downside target, you would be looking down towards 1370, 1365 as a potential downside target. That's a pretty good move to the downside, considering this lackluster and volatility. NASDAQ, you can see this past week's point of control, we finished right there, but on the underside of it. So you just watch it. You kind of use it as a pivot. 2730, use it as a pivot and trade against it. If as far as from a trading standpoint, you can see last week this level, it worked trading both sides, and I think that you can use it for next week as a gauge, and you kind of act appropriately. So let's go ahead and look through all of our positions and see what's kind of going on. Okay, so what I'm going to do is look at these charts on 4 hour, all these names on 4 hour, this 4 hour chart, just to give you a better idea of what's going on. I want to avoid the daily chart just so you could, because I do think that this market is set up more for, you want to look for short-term moves as far as any upside goes. So this is something I completely ditched on Friday, and actually if it comes back to say 120, 119, I'll look to buy it again, because it would be against February's point of control and the point of control for the last 180 days. So it looks interesting. Las Vegas Sands, you want to look at this. It's at the top end of the range, and you have point of control for March at the top end of the range. I'm just picking out a last date when the point of control finished at the top end of the range, and we're looking at looks like November. And it ended up being a short-term top, just like it was back in September. So just be careful. There's no volume up at these levels, and all the volume has been done between $40 and say $42. That's not a bad thing. It shows you we're trending higher, but it's also showing you that there's not a lot of money involved at these levels. You just have, basically not casual buying, but just grazing. So as far as a pullback goes, you could see the low 50s without a blink of an eye, really, and it's just something to be aware of. Apple, similar situation. You have point of control for March at the top end of the range. If we start to trade down, we could easily press back down towards 550. So you really watch this 580 to 610 level or so that we've been trading in for the last 2 weeks. If we stay in this range and start to push above 610, then everything's okay. But if we start to falter, there's no volume between, say, 575 and 550. So we'll drop down to 550, without much trouble. Amazon, this is actually one of the bright spots, and I actually think this is not the end for Amazon. You look at what's gone on in the last couple of months, handful of months really. Obviously, you can see 195 has been the high, it's been the top end of the range, whereas 180, 175 or so has been the bottom. We broke out from this range this week, as I perceive. 185, you can see the point of control at 183.60 or so. The point of control for the last 4 months, all under 185. Now we're above that. I actually think that this thing, if we get above 195, you would look up towards 210 to definitely 215 as a potential target. If you want to play that, maybe look at the 200 by 210 call spread. Maybe if you want to go out to April, that's cutting you a little short on time. Maybe May, if you want to go out to May, maybe 200 by 215. That would probably be a position that works. I'm long the 190 by 200s. I took profits on the 185 by 195s on Friday. So that ended up being a monster trade. I emailed everyone saying that I took profits. I think the gains were around 60% or so. So I like this trade, and I want to see it continue to the upside. Mastech, this is a new position that I have initiated Friday. And what I like is you have point of control for the last 180 days at call it $18. You have a nice base that's formed at $18 for the last, definitely in the last 2 months. And what I'm looking for is a pop to the upside. I'm looking to see if it can test the top end of the range that we saw at the end of last year. Between 21 and 22, it's where I'll take profits. But as far as my stop, I have it under these recent lows, 17.75. So I'm risking $75 for a potential of about $2. I like that risk reward, and I think it's going to pay out. ConocoPhillips, just be careful. You have Marsh's point of control, very tight range, but you're kind of falling away from that, and that's a bit concerning. However, if we do drop any lower, say the low 70s, that's where you really want to consider picking up ConocoPhillips. Baidu, this is another position that I took some profits on. I was long the 145 by 155 call spread. You can be like, yo man, where's this gone? It has barely moved. Well, I caught this from a couple dollars lower, and the position was up a decent amount. I want to say 50% or so, something like that. It was actually very nice, and I'm sorry, I took profits. No, the 145 by 155. I took profits on that. I'm still long the 140 by 145s expiring next week. I'm just looking for a time decay, take advantage of that short call, and take that position off at a profit sometime this week. Freeport, I have a very small position, and just in case this ends up being a bottom, 37.50, 37.60 or so. If so, this is a level that I want to be long from, and I want to be involved from, so I can easily add to the position. But overall, I don't even really pay attention to it. I stopped below 37.5 though. Ford, this is another position that I have completely skid out of. I just want to point out, between 12 and 13, you're balancing. You have point of control for the last 180 days at 12.41 or so. What that means to me is that we're going to get a nice move out of this 12 to 13 range, and it's going to happen soon. Just give it time and just be prepared for some type of opportunity. Whichever way Ford wants to go, you could probably do the 12 by 11 put spread going out, say, a month, or the 13 by 14 call spread going out a month. Just let it tell you what it's going to do first before you jump into this trade. Broadcom, this is actually a name that I am long, and it continues to work to the upside. We are sitting on March's point of control. You can see we bounced off of it the past few days, and that's positive. You really don't want to see it go lower than that, and if so, realize that there could be some more support around 37, which was January's point of control. You can see the nice volume at these levels, but you can also see why Broadcom has had such a nice bounce. Looking at just the beginning of year to date, pretty much, and you can see January's point of control was at 34.50. The bottom of that range was 34, and you can see, sure enough, that was the bottom in early March, and it's the point of control for the last 180 days. Look for a continuation to the upside. I'm still saying mid-40s on Broadcom. Walter Energy. This is a name I'm actually tempted to get even more involved in. If we start to break above these levels, call it $65, we could easily go test 75 again. And if that's the case, you may want to look at like a 67.5 by 75 call spread that goes out a month or so, and look to really capture on this volatile name, because I know just being involved at these levels, I'm long the 62.5 by 67.5 April call spread, and it's working out for me. And I love the fact that I like this setup, and I just want to see this continue to the upside. And if so, you want to manage your risk because it's really volatile, but you want to be aware that volatility works in both ways, and upside volatility, it can move in a hurry, and if you lay out an option position, it could easily double. But the reason why you sell that upside call is to limit your downside, just in case the position does not work for you. American Express, still along this name. It kind of looks like Apple in the way that the point of control is at the very top of the range. Just be careful, and don't let this come down and crush you. Let it do what it's going to do. But if the market pulls back, you want to look to scale out of some of these names and hold a much smaller position. All right, so and the other position that I have is Kodiak Oil and Gas. This looks like it's going to break out, and if so, I'm still on the 10 by 12.5 call spread, I should say. So this is really starting to work out nicely. All right, here's some trading ideas. Yamana Gold, bouncing off point of control for the last 180 days for March. Something to be aware of. I'll bring up the yearly chart for this, just so you can see 200-day moving average. We're bouncing off of it just like we have for the last two times it's seen that level. I like this, and I want to see. Well, if I had to be in a gold miner, that would be it. American Electric and Power. If we get a rotation from cyclicals into some safe money, this is a name that you want to look to get involved in. Point of control for last 180 right at our feet here, so not a bad level to get involved. And they pay a 5% dividend. Avon Products. I've been waiting for this to base, and it looks like it's starting to. I think this is right here, right now opportunity. You kind of see the higher highs that are forming. Point of control for the last 180, right at 18.30 or so. That's almost $1 below current levels. For the year, for the last 52 weeks, it's at 18.56. You can see. I would say you could easily see $22 on this. Not a big move, but a move. And I haven't checked the options yet, but if they're liquid enough, I would be looking at the 19 by 21 call spread or so, or just going long the name with a stop under 18. That's about 4% risk, 5% risk, I should say, and with a target of around 21. Not a bad risk reward. Bristol Myers, another safe play if you want to be able to sleep at night. Right here, right now, Bristol Myers. I take a shot at it I would have your stop pretty close, probably right under 32.50 or so, and see what it does. But it looks like maybe the short-term downtrend may be coming to a close. And the reason why I say that is just looking at the most recent price action since year to date. Every point of, or I should say, January and February's point of control at the lower end of the range. We're right at those levels now. That's why I don't think it's a bad place to get involved. If you get stopped out and lose 50 cents or so, that's trading, not a big deal. I'm just looking for some opportunities, and there's not a lot out there, which leads me to believe that either a lot of stocks are in a holding state, which we are still holding a lot of stocks, or a lot of stocks are starting to roll over, not at the best buy point, but which gives you the indication maybe we are at some type of short-term top. Chevron, this is one of those names, looks like a decent opportunity off 105 here, point of control for last 180, point of control for last 52 weeks. You have the 200-day, not too far below. You're at the bottom of this channel. The only thing that's kind of not going for you is 50-day moving average is moving lower, but I don't see that, that there could be a lot worse, to it. So I think it's a cheap shot for Chevron. I don't, as far as the fundamentals and whether it's overpriced, that's for you to decide, but we're at a low risk opportunity, and that's what I want to point out. Hewlett-Packard, don't take your eye off this. We're back at September's point of control level, just about. I like this, and I like the fact that this has gotten crushed for the last, call it a month, and really we're still we're just at the bottom end of this big range, of this 6-month range. So this could be one of those opportunities where you're buying at 23, and then in a couple months, 6 months or so, you're selling at 29 on a slow mover on a cheap stock. Now, whether you think the fundamentals are broken and this stock is destined for $10, that's for you to decide again. But I do think we're at an opportunity. I would keep a stop about $1 below current prices. Coke. Now we are at basically 52-week highs, and people would be looking, double top, whatever. What I see is a stock that's kind of breaking out of this range potentially. I wish we caught it back in the mid-60s. Obviously you could have been looking at it there, but you would also miss out on a lot of outperformance. The only thing I'm saying is if you want, to sleep at night, it kind of looks like this is trying to make its way out of this range. Maybe this isn't the best right here, right now opportunity because of where we are, but keep it on your radar as, the long term, it's still, everything's okay. Visa, the reason why I'm looking at this name, and I'm going to show you MasterCard too, is we're in a volatility squeeze. And a volatility squeeze is basically when volatility gets squeezed and there's only one outcome, which means an increase in volatility. And increase in volatility can go to the up or downside. And after these, recent days, looks like it could be to the upside. The trend is definitely higher. And all you need to see is a continuation. So what I'm going to show you is the actual squeeze that's going on with the Bollinger Bands. Okay, here are the Bollinger Bands. You can see right now, similarly to where they were here, but they're even, they're squeezed even more right now. And what you're looking for is a resolution. Let me delete this, sorry. A resolution to the upside. And if we do that, you wait for a break above 120. If you get that, buy the 120 by 125 call spread, buy some shares with a stop around 117, and look for a continuation to the upside. This is one of those names, why can't it do an Apple? Why can't Visa do an Apple? And then you look at MasterCard, as I wait for it to load. Okay, MasterCard, you can see similar situation. you have a squeeze going on, and all you're looking for is a breakout above 428. If so, then everyone's a winner, and you can look for a move up to, say, 450. And it's not a huge move, but it's a decent move, and you can definitely make money off of it. And I'll show you another example of a squeeze that really paid off for traders. And you can see Bank of America. Very tight squeeze. You got the breakout on this March 13th, and what'd you get from there? A nice move to the upside. So these tend to work. They tend to work out, pretty well. Just be patient. Don't jump the gun because it may not work out. But at the same time, I like this, and just be aware. Now, as far as a potential short, I look at Boeing, point of control at the very top end of the range. I'd be looking at maybe the 72.5 by 70 put spread expiring in April. And if the market rolls over, this will definitely work out. And you could even get a little more aggressive and go 72.5 by 67.5. But you are expecting a drop below the 200-day moving average then. I wouldn't just go for a base hit, and I think this position will actually work out. Alright, I'm going to briefly go over oil, gold, dollar, and euro, and just kind of go from there. Oil, trading in a range, looking for a breakout. I expect a breakout to the upside, to be honest. If not, then you look for a move back down to 102. So it's kind of as simple as that. Gold, I really like this bounce that we saw on Friday. Sure, it was an oversold bounce, but if we start to move above 1670, I view this entire group that sold below that, they're stuck and they have no choice but to buy. That means we're going to move back up to around 1720 on gold. That was February's point of control area. That actual point of control is 1730, but point of control for last 180, 1662, right around these levels. Just to show you what's going on, we've really just been consolidating in a range. I like this right here, right now. So I'm along the 161 by 164 call spread on gold, and I'm long GLD shares, which I do not plan to sell. Dollar, looks like it's weakening. We failed against January's point of control, and from there we've really gotten hit hard. Now failing against March's point of control. If we drop below February's, it gets ugly. I think the real story for the dollar, bear with me for 1 second, and I know this chart's zoomed out a lot. Let's see if I can zoom in some. That's not what I was going for. Alright, this is good enough. No, it's not. Okay, this is what I was looking for. Sure, you have short-term momentum to the upside, but you have point of control at the very top end of the range. On this 5-year chart, just something to be aware of. If it's at the top of the range, if the overall direction for the dollar is to the downside, then, theoretically this isn't a bad spot to really get out of cash. Now, with that said, that doesn't mean you have to go all in with something else. You can hold cash. It's not a bad thing. But you really look at something like the euro, and the euro kind of looks like it's bottoming short-term and long-term. And what we're seeing here is a complete rejection from any level under 130, which is good news. Now, if we start to clear, well, really, I think this is an uptrend. If we clear above these recent highs, we'll go test 135, and if that's the case, and we pass that test, then we should go and test around 136, 137. So that should help the market, if anything. So overall, to summarize, stick with what's working. If it's working, then stay long. If it's not, if it's faltering and you're nervous about losing money on that trade or giving away some of your profits, then sell it. You're not competing against the market. You're trying to keep your portfolio at all-time highs. And if you focus on that, you're going to find yourself making a lot of money in this market. be patient. The opportunities will come. They'll come to the upside. They'll come to the downside. But the ultimate goal is to have that portfolio at all-time highs. So take care. Have a good night. Have a good weekend. I'll talk to you on Monday.